Hey, Pat, welcome back to Arizona.
Rick, how you doing, buddy? Yep.
I wasn't sure you were
It,
going to be back today, so I had Plan B ready. I had cardboard Pat was within reach, so I wasn't
yeah.
wasn't sure what we
Well,
were
Real
going to
Pat was
do.
back for another funeral, so we got my buddy got my buddy buried. So
Yeah,
two in
you've
a
had a
couple weeks
string of
is
bad
just
luck. That needs to change. So that's never
yeah,
fun stuff.
exactly.
So
So I wanted to come back and talk to you guys.
well, we've actually got fairly
Welcome.
good real
Thank you.
estate news this week. So except for your broadband, so
Yeah.
it's a
Yeah.
it's a little choppy.
Yeah,
So let's
my
test that again. If
shining light here coming. I think.
people start hitting the like button, it's supposed to improve your connection. So we'll see if that works.
Okay. I get my.
It hasn't yet, but um, so when I say we had some good news, I mean, the Fed came out and talked, and you and I'll talk about it in a second, and it didn't affect interest rates at all. That's good. Um, the economic numbers from unemployment or for job growth today was good and higher than expected. Inventory is going to come down, but it hasn't seen sharp declines yet. I mean, we're sitting at 7,700 homes on the market today, and our 7-day moving average showed it showed some loosening up rather than tightening. It got really tight at the end of the week, and then now we've got that 400 unit gap there again. So that's helpful. But it's still like 4,000 coming on and 3,600 going under contract. The good news is that we're not seeing inventory drop a bunch. I mean, it's going down seasonally. See how it went down in 2019, went down 2020. That's just welcome to the holidays. So this chart makes it look like we're not going to hit 2020 inventory levels unless we flatten out. Might happen. We flattened out this week. So we went down here. This is like last week. So that might have. It won't make an impact on the market, though. It's not big enough to do anything. So
No.
the big news of the
That's
week.
the thing.
No, go ahead.
No. Those little movements that really just don't change anything. It's just kind of sloshing around once again.
Jackie's got 4 new listings. That's going to change the whole market. Congratulations. That's cool. And
well, then we got to change those numbers.
Awesome. Pat made it. So yeah, we're going to have a hard time
keeping
Jackie. Up with that. I had a nice closing today. The realtor on the other side, I want to pull up his name here. His name is Tom J. Popa, P-O-P-A, from Thomas Popa and Associates. I got to tell you, best agent I've ever worked with. I mean, whatever you needed, he was very responsive. He got right back to you all the time. He just helped work things out and going above and beyond. And get this, he's even, as an agent, offered that after my buyers move in, he's going to send his cleaning crew over to clean the house. I mean, I've never seen that. I've offered it, but I haven't seen it from a listing agent. But anyway, I just, when somebody is that good, I want to make sure everybody knows that he was really great to work with. So I'm going to jump in quickly. We're not going to spend a lot of time.
Jackie's probably not a bad agent either, though. Jackie Smith.
I've seen her numbers. She ain't too bad at all.
She seems like a good agent herself. We got some good agents. She's chiming in. You're chiming in. It's always nice when you have agents working together. Huh?
Yeah. We don't need to be at opposite sides. That's
no. You don't work
but
together.
Agents have been on the opposite sides of Zillow for a long time, and they came. They made the conscious decision that they're going to get out of the home buying business, and they're selling them all. And there's just it just made YouTube go nuts this week. This is it. This is the top. Here's the crash. YouTube sees data that we don't see. None of that was true. No, Jackie, I'm just kidding. I haven't looked up. No, not at all. Actually, I haven't. But I'm gonna at the end of this call. So it's important to have great relationships with others.
That's so true.
An agent that taught a class that would stand up and start and say, the other agent is your enemy. And I just thought
That's just idiotic thinking.
Yeah. So Zillow decided that that they wanted to have more of the market. They didn't care if they made money. This is what I was reading. They didn't care if they made money so long as they made the consumer feel confident of their process, then they would make adjustments. So along comes August, and you saw the Cromford report was making comments going, we don't understand why Zillow's paying so much more for these homes than what they're worth. We don't get it. What are they doing? And lo and behold, they ended up buying 9,000 homes and overpaying for them because the numbers were based on their estimate. So their own computer algorithms were saying, oh, here's what it's worth, when that wasn't the case at all. And so at first they were willing to kind of absorb that, but it started draining their money so fast because the second problem that came along was they didn't have their own contractors. So they had to hire outside contractors. Well, there aren't any now. And there's no paint. So now their holding costs went up. And they said, we gotta bail. And it's interesting. I ran into an example here, Pat, in Florida. Now, people accused Zillow of manipulating the market, and I don't think they can, because, if you get a house in a neighborhood, appraisers, they look, I want to get an appraiser on here to interview them, but this is how they tried to manipulate a certain condo complex in Florida. They purchased 496 homes in South Florida and sold 136 of them. And this one listing recently listed a townhouse in Davie for $230,000 when the highest sale in the community to date was only $210,000. Soon after, in comes Zillow Offers, purchased a neighboring townhouse for $250,000. Within a few days, she said, every townhouse in the building had its Zestimate raised to $250,000. So her client raised the price and ultimately sold her unit for $269,000. So, the appraisers wouldn't look at anything like that, but Zillow changed the Zestimates of all the other places because they thought that's what they were worth, because they're trying to offer people $250,000. I mean, that's nuts. That's just absolutely nuts. Now, where's it put them? They have $1.3 billion in bonds out there, Pat. And it says here, unlike many residential mortgage bonds sold under the fix and flip umbrella, Zillow's bonds are backed by a revolving, not fixed pool of collateral, which means their number of homes that they own are changing. So it's revolving. It may mean a quicker outcome for bond investors. That's because if Zillow no longer buys homes to replenish the deals, its bonds will turbo down quickly, said one investor. Also, the mortgage to Zillow is non-recourse, meaning creditors can't come after the company's other assets if it fails to pay, make it easier to walk away. Now, I don't know if that's something that they would pull the plug on, but that's interesting. So the bond holders of Zillow bonds are shaking in their boots.
Well, I mean, part of the iBuyer process basically comes, they're part of their marketing strategy was basically, or their messaging was, we're going to do this with speed, inconvenience and speed, really speed for the most part. And now people are listing their homes and they're selling their house in a day, 2 days, 3 days. So that speed, their advantage is gone there.
Well, they have a cash advantage, where they come in and treat it as a cash transaction. So they, in theory, it looked like it would work, but it's just, I was joking yesterday on my video where I said, imagine being that guy that goes into the CEO and go, hey, remember when we changed the algorithm, in August? Yeah. Well, we kind of overpaid for some homes.
Well, how many homes? About 8,000.
About 9,000.
But it's about $2.8 billion worth of volume.
So we need to fix that. So
yeah. Well, I love their quote. It says here, and there's a quote that I saw. It's where is it now? It said, I guess a visit. I don't know, this one article, the CEO prompting, it says they're going to lay off 25% of their workers. They took the decision as a heavy thing. And it says here, a visibly shaken Barton blamed, quote unquote, the unpredictability and forecasting home prices as one of the primary reasons for winding the company down. adding that quote unquote continuing to scale Zillow offers would result in too much earnings and balance sheet volatility.
Yeah.
So
So let's dig in a little deep on that for a minute. So he's saying the inability to predict real estate prices, in other words, long term or even the short term.
yeah,
We've said don't treat houses like a stock, right?
yeah,
So we're looking at the pricing charts. Prices have not come down in November, and they're projected not to come down in December. Where
hmm
when you dig into the weeds of that statement that he made, what they're having a problem predicting was they didn't see a pandemic reoccurring when they did this. They
hmm
didn't see a supply side issue that was going to ratchet up their expenses. They didn't
hmm
see having a shortage of contractors and paint, and so those were the things that were really throwing them off. And they also didn't see, and they weren't able to forecast with their computer model what the real price of the home was.
hmm hmm hmm
Jacqueline says, make sure you look up the right Jacqueline Smith. There's 5 of us. Oh, Jackie, hey, we need to do business together. We need to talk about that. You can help me out. Tyler, are
You're one of the
you're
Charlie's
the one
Angels.
from Charlie's Angels? Down, Tyler, down. Um, so they weren't just saying that they couldn't predict house prices. I think they were admitting finally our computer just didn't get it right, and we didn't know how to tweak that to make it fit.
Yeah.
We have a comment here from Neil. I sold a home to Open Door in August. They overpaid and resold it 37 less than they paid me. They were duking it out with Zillow, Neil, and I think they thought they could outlast them, and it looks like they did. So they were willing to lose money to win the short term. So anyway, did you see this, Pat? Because I wanted your comment on this. This is GSE seek inclusion of rent in credit scores.
Yeah. That's a good thing. Basically, if you're renting, obviously it's going to impact. They've done this before. So I don't know. I mean, I haven't had time to read the article and read it. I got a handful of emails this morning and yesterday about that, but it's kind of like you can add your cell phone, you can add different things to your credit to kind of, if you have you have a shortness of credit, depth of credit, so to speak. But this is going to be good. I mean, because a lot of people have been paying the rent on time, but just, people have been renting for 1, 2, 3, 4, 5, 6 years, and they don't have it. It basically monetizes your rents, your
Yeah,
credit
I don't know
score,
how
your
the
rent.
mom and pop landlords can do that. I know some of the larger places like Graystar they automatically add you to your credit score.
Yeah, it's a process. I mean, I
Credit
think the mom
report.
and pop can. I mean, I'm going to dig more into that, but it's definitely going to help because it's, basically, if somebody's a first time home buyer and they've got, usually my problem is they're usually light on credit. They got maybe one credit card and that's it. But if you could prove that you've been making a $1,400 or $1,500, $1,600 or $1,700 rent payment for the last 2, 3, 4 years, it's just obviously going to help. That's, it's one of those things that you can go to an underwriter and I can, sometimes you have to get down to brass tacks with underwriters and just duke it out with them, talk to them literally one-on-one about a particular file and say, listen, this guy's been paying $1,500, $1,600 every, like clockwork the last 6 years.
Yeah,
so
yeah,
it's definitely
that's
help.
good news. I'm glad to see that they're doing that.
Yeah.
So we kind of, we had a little chit chat with the Fed chairman, and he said that they're going to start pulling back mortgage-backed securities by about $5 billion a month in purchases. Not much.
Mm-hmm.
What's that? About 10%.
Yeah, but
and as you said, the anticipation by the bond market was already baked in the cake. So rates actually went down after his statement.
yeah, they've been coming down. I mean, we hit 169 on the 10-year, 170 on October 22nd, and now we're sitting at 145. So it's come down. Yeah, a nice little bunch here in the last, a good bunch. Obviously, I locked in some people that a couple days ago, not anticipating they're going to fall down even further. Because, I mean, the job numbers came out and they were good. And typically, I mean, this is what just drives you wild, that they're stronger than anticipated. And in normal times, basically, you'd have the bond market reacting negatively. Where it'd be down 20 or 30 basis points. But this was always, it was up 41 basis points. So sometimes you just shake your head. And
this is why you guys drink a lot in that industry, isn't it?
God, Yeah, it's just,
I
well,
thought
the
it
old
was just
set.
because you were Irish, but it's
Yeah, Irish, I'm from Wisconsin. That helps. But yeah, it's like I always pretend. Sometimes I've even gone to the. This sounds stupid, but I've even pretended to lock somebody because every time it seems like every time you lock somebody, rates go down a little bit further. Like I almost get in a mode where I'm going to pretend to lock a loan, and then I don't. And I'm like, it's kind of a game. But you have to. I mean, I watch the charts a lot more than the average mortgage guy, no doubt about that. But yeah, this is a big day, a good day for the bond market. So, but it's not going to last. I mean, can I share my screen?
yeah.
Let's see
Yes,
here.
Pat, you may.
Let me share my. Let's see if I can see what. Yeah, share that one.
That's because you got 9 monitors there, so it's hard
Yeah,
to
I know.
figure
I've got 14 different monitors here, but this is.
I'm a twofer.
See here. So basically, you saw here. They started. These are the different support lines we follow. But you see here when it broke this, it went up. These are rates going. These are actually rates. This is not the price of the bond, which is inverse, but rates tipped up here, and then they started slowing back down. You see this? Remember I was telling you about a month ago where they're basing out, and I thought now we're ready for a move explosion. Remember that we had that one crazy day upward, and it's like, oh boy, here we go.
Are they breaking out on the downside there?
Yeah, they're breaking. Like, see, this is another support level. It broke it. These little lines are support levels. So then. Once you see like this line up here that broke, and then you see some crazy days after it breaks, like it broke here, and then we saw it break downwards. So, this is probably it. I don't see us going down. People think that we're going to see some stuff going on for. Let me see if I can. This is back September. This is September, no, October. Before, and then January is when it made its move up here. Rates started making a move. So we'd have to really get a crappy environment to get rates down this low, but I think we see a base still right around here. So they've been nutty, but it's good because it's still holding. They're still holding high 2s, low 3s. So.
Well, the Fed Chairman Powell said that he really laid out why he thought this inflation rate was transitory, and he goes, it's all supply chain. And he goes, I can't predict when that's going to happen, but he said that's what it is. And so I think we're going to have to, that he seemed to have convinced the bond market that was the case.
Yeah.
That he's pleased with the numbers that he's seeing on projected economic growth, and he thinks we're on the right path. But he goes, well, we got to get people back to work. And they didn't factor that the Delta variant would be as strong as it was and make a big impact. And locally here, their supply has started a slightward downtrend once more, according to the Cromford report, which will dismay buyers and please sellers. The trend is only a couple weeks old, but it's likely due to continue for the rest of 2021. In other words, it's a seasonal pattern.
Mm-hmm.
Demand is more complicated. The closed sales count for November was unimpressive, down 12% when compared to November 2020. However, the counts of listings under contract and pending listings are up sharply from last month. So that'll make the close numbers be up, in a few weeks.
Mm-hmm.
And so it's saying that the Cromford market is starting to overall start once again to favor sellers. And then finally, they said some people appear to think Zillow exiting the home buying business signals a top in the market. These people are mistaken. It indicates that Zillow did not understand how to operate a home buying business. They drastically overpaid for homes and were then surprised when they could not sell them for a profit.
Mm-hmm.
They had waited a few months, the problem would have gone away because of market appreciation. However, that would have tied up an enormous amount of capital. The primary mistake was overpaying for homes compared to market value. So, there's a very, reputable data guy saying, hey, here's the problem, guys. So
it's only 7,000 homes. It basically
It's nothing.
Yeah.
It's
yeah.
250 here.
Yeah. Oh, 250?
Yeah. So it's seven. Yeah. It was. I think it's 7,000 to 9,000 nationally, but it's only 250 here. They can give them all away.
Yeah.
And it won't affect anything. They can say, here, we're having free Friday.
Don't start anything on the internet. You know how many millions of people are watching us? Don't start anything.
Yeah. Don't do that. Millions and
Don't
millions.
start any
So
fake news here.
yeah. So yeah. Rick
Just
and
say,
Pat said houses
Rick
will
and
be
Pat
free
said
on
that
Friday.
Zillow's giving away homes.
Yeah. Well, let's say it anyway and see what
Yeah, what the
happens.
hell? Yeah, there's
So this was another interesting article, learning from Wall Street's edge in buying fixer uppers. You know how we blame the investors? There,
Mhm.
uh, analysis, Laurie Goodman and Edward Golding said that most of the homes purchased by Wall Street investors as rentals needed repair to enhance reliability, and the institutional buyers have significant advantage not available to individuals in improving them. And so they did this study and found that on average, they had to sink in an additional $39,000 for upfront renovations. And they really jumped in 2010 when nobody else could afford it. And it says there are financial advantages institutional buyers have in this market. They typically pay cash secured through capital markets. So the article, in summary, is saying they've actually been out buying homes that you and me can't afford to buy and fix up. So, we can't do. Oh, is the watching now in millions? Let me look. It's no. So, the, what we're trending.
Yeah, exactly.
I've been in many a sales room, and in fact, I had to do a big presentation once. I was in this University of Southern California sales class, and we had major grocery chains that was there, the CEO and everything, and we, as a team, we had a makeshift grocery store, and for us, we were losing our shirt, and but the numbers were turning around. So I think we called ours the Titanic market, and
Mhm.
one of our guys dressed like a sailor and started the presentation. And the only thing that we could say that was positive was, "But look where we're trending."
Exactly.
We found out where the problems were, and we've turned it around. Meanwhile, everybody else is beating us by millions. And so, but we did win best presentation.
That's funny. Hey, quick
So
question on that Mortgage News Daily, that article about the fixer up. You talking about were those people going in to fix them up and spending
no,
40,000?
Wall Street firms.
Yeah, yeah. That's why I think I'm surprised that people haven't really still looked at the home style renovation loans. I mean, they're kind of a pain in the butt to do. I mean, but they're that's, I mean, people can, I think I mentioned that before, where they can buy a house for say 350, but once they fix it up, they appraise it in the beginning at 350. But if you put $100,000 in, it'll be worth 450, and we loan on that 450. So it's
Well,
a
this
pretty good
study
loan.
showed that the average homeowner spends $6,300 upgrading their home after they buy it, but these
Mm.
investors spend an average of 39,000,
Mm.
and then they put renters in them.
Yeah.
But a loan like yours would certainly be the best way to go to compete with guys like this. But you
Yeah.
still got to get your foot
God.
in when they're swooping in with cash, right?
Oh yeah, exactly.
Uh,
Exactly.
and most of this data was compiled in 2019, so
Yeah.
they're a little behind the eight ball today. So,
No, I mean,
so
you said rates are holding steady. I mean, they say that the MBA rates will get start trending toward 4% by end of 2022, but we're holding nice and steady here. I mean, it's just amazing. So things are status quo on my end on the mortgage side, nothing new crazy, but we'll see what happens in this next holiday season.
usually the first week in November, I start seeing a slowdown, but I haven't yet.
Yeah.
And obviously Jackie hasn't either. So I see a slowdown because you wind down and go, well, I'm just not going to be doing a whole lot of anything around from Thanksgiving till the first of the year. But I'm
I'm a firm
hoping.
believer. I'm a firm believer. The last 15 years I've seen it where I tell people, if you're looking for buying a home, November, December is like two of the best months to take a look, because like you said, like we talked about this, we talked this in the show before, is like how people, the serious sellers that need to sell, they get a little antsy if they got to sell by January or February for a job change or something like that.
Yeah, I think you've got more. You're negotiating with less people. You're competing
Yeah.
with less people, and for
Yep.
sellers, you have less traffic coming in your house, but they're not kicking tires except for the Friday after Thanksgiving because everybody's
Yeah.
got visitors from out of town, and so open house traffic is nuts. It's the best time ever to have an open house, but you get tons of people, and most of them are just, oh, I'm just showing mom and dad what's
Yeah.
available in the neighborhood,
That's where you grinning like, really, really.
yeah, that's great.
But
Yeah,
there is
have
people
a
that come from
cookie.
out of town, from like, from Wisconsin, Minnesota. They start kind of getting a feel, you know, kind of poking around.
Jackie says,
So,
I had numerous calls today from buyers on hold for a year telling me they're ready.
hmm,
Hearing that
very
a lot.
cool.
They're kind of like, I've been waiting. I've decided I can't wait anymore. I saw a comment on one of my videos yesterday where they said, well, I'm waiting to see what happens next year. And I said, I don't have any answers for you. I know people that did that this year are kicking themselves.
Yeah,
So
I mean that's the thing. I saw something on mortgage, MBSI. I saw something from current keeping current matters. That KCM. That's a real
yeah,
estate site. But they're like, people that waited last year cost themselves probably about 50 to 50 on average, about $50,000 to $55,000.
yeah.
You know, um, it's not going away. I don't see it. I mean, like you said, something pops up and it's not going down. It might soften up a little bit,
Well,
but
I get plenty of comments that the crash is coming or that there's going to be a huge
yeah,
adjustments, but I get a lot of comments and I get zero data. In other words, if this number of active listings has to change. I mean, if you look at our extremes here, we've had a high of 58,834 listings,
mm-hmm,
a low of 8342. We're below that now, and on average is 2792. If we stay in this low category, sorry, prices aren't going down. They're not.
yeah,
They just can't.
no,
Now, our sales per month, the lowest we've ever been is like 2,500. On average is 71, and we're sitting here now at 3,400.
mm-hmm,
So we are up from the low, but we're in no way knocking it out of the park. It just
mm-hmm,
seems like it because we're all going to the same home. So
mm-hmm,
the highest sales per month we've had is 11,708. The 7-day moving average is almost the same number, 2732, and average
mm,
is 7165. And you and I are tracking that we're seeing 3,400. So, but we got 3,400 chasing 8,000 homes, where normal you have 7,000 buyers chasing 27,000 homes.
yeah,
You have to get above 27,000 for prices to go down. If we get this 27,000, prices will level. So all kinds of ways that could happen. You just never know. Sorry, folks, but Zillow's not one of them. So we just kind of have to wait and see what's going to do it. But until that number changes, you can safely look now and say the number of listings that we have now and the number of sales that we have definitively means prices are going to be higher by the end of the quarter.
yeah,
There's
yep,
no escaping it. People are
no,
out looking now and writing contracts now. They're going to be higher in December.
mm-hmm, yep,
Tyler says you can cherry pick some data to show it's crashing. Yeah, but you
yeah,
can't cherry pick that. You can't cherry pick inventory. And but I agree that I
yeah,
could probably show you something and go, oh, here it is.
yep,
Here it is right here. We're seeing it. And but in 2006, we were sitting there with 58,000 active listings, 2006 to 2008.
yeah.
That was a clear indicator that everybody was ignoring. So
58,000 homes is a lot of homes.
yeah, I think it was a year and a half worth of inventory.
Mm-hmm. Yeah, it was about.
So,
I remember. Matter of fact, coming to think of it, I used to. I remember myself on the phone saying, "Now we get about 18 months of inventory." I remember that saying that on the phone. So
Tyler, I read that Austin started it. It's interesting. They seem to be building them quicker. I mean, it's a really interesting machine. They build this big metal frame all the way around the house, and it looks like cement, and it just like
I've
puts
seen,
these
yeah,
layers up. It's phenomenal. They're touting that as a way to offset some of the material shortages, but then again, even that goop that's building the house is in short supply. So, and the people that learn how to do the work the machinery are in short supply. But I'm all for innovation. I would love to see homes be able to be built quicker with better materials, and you know, till you need to add an electrical outlet. Yeah. There's a lot of design that,
No kidding. Can you imagine that? It's like,
where do you run
crap.
the,
What the hell we got here?
you drill in the wall. How do you
Goop.
get cable?
Yeah.
Cable has to run along the baseboards on the inside. So it's a work in progress. Somebody's going to figure out. It'll be interesting. So, hey, have you ever driven up to Lake Powell, driven up north of Flagstaff? There's those mud hogans that are probably going up valley. You can check some of those out. So I've seen mud hogans on the Navajo Indian Reservation with a satellite dish out front. It's worth the drive just to see that. Well, yeah. Pat, welcome back.
Yeah, thank you, sir.
Everybody have a fabulous weekend. I'm headed up to Wickenburg tomorrow with my middle son. We're just going to do a quick overnight and
cool.
Relax and have some fun in the old RV, and then be back at it Sunday afternoon.
All righty. We'll talk to you this next couple days. See you next week, folks. Take care.